What's up, guys? This is Joe, otherwise known as Catching BTC on Twitter. This is Bitcoin Watch number 4, where I do technical and fundamental analysis on Bitcoin's price action, as well as their price targets and expectations for the future. So we're just going to jump right in here. I've actually pre-charted, I've pre-charted some aspects of what I'll be looking at. So this video will mainly be about a buy zone, setting a buy zone for this retracement, because as you can see, we've sold off quite significantly. So let me just look how much percentage. So we sold off 20%. We sold off 20%. And I just wanted to do a quick, because I've seen a couple of posts on this on Twitter, and in the last bull market, the corrections were averagely like 30 to 40%. So this one, 40%. This one, 37%. I'm sure this one already counts, but 30%. So, averagely we're looking at like 35 to 37% is what we're looking at. And so if we just picture that on, I don't like to use this as a good example of technical analysis, but it gives us a good idea of where the market might end up. It just gives us a higher probability if it ends up in our actual buy zone. So if we just do, we'll do 35% and just see where that ends up. So 35% leaves us at this 0.5 fib. I'm honestly not too sure we'll even make it that far down, just simply because I really don't think we touched an area of liquidity where there was enough sellers to push us down that far. But it's perfectly possible. It's very perfectly possible. So we will have to wait and see, but I'll leave that on the side there, and I'll get rid of this top here. So looking on the daily chart as well, if we just take into, if we look at the moving average, do some historic moving average analysis as well, there's all these breakdowns or retracements in the bull market over here. We've been bouncing off the 15 moving average, and then we get weak, we break through it, and we don't really test the 50 moving average. We jump straight to the 100 moving average, and that seems to be the case every time, apart from this parabolic, when we start to get a bit parabolic up here. But that's still, we are still getting close to that 100 moving average. So realistically, if we took the average of that, we've gone over and just under. So we're looking at being on the 100 moving average, or just thereabouts. Same as this percentage sort of analysis. So if we come over here and, look where that bounce, if we did sell off to that 100 moving average, look where it would line up. We've got that 35% average percentage drop. We've got the 0.5 fib. We've got a very, very strong liquidity pool on the daily, looking at the daily. So put the bottom there. Let me just make these a bit more normal. Sorry if you can hear that, it's my fan. So, if I was to draw a liquidity pool of where, I'd really, if I wasn't using any other instruments and just looking at this, this is obviously going to be really the strongest area. Just by using moving average analysis and looking at percentage drops from the past couple of weeks, we're sort of getting this. But it's important to note, and I have mentioned it in other videos, and something that I actually completely really didn't take into account, because it's hard to really expect it to play out the same. But every bull market and bear market, they've had this strong rally, and it breaks above this 236 every single time, first time. And for some reason, I still tried to short it. I have no idea why. I even posted on TradingView the day before. I said, yeah, so 236 is going to break, and it was sitting around here, and then suddenly within like a day we've broken above it. And basically every bear market into the bull market, we've had this strong break above the 236, and we've hit around the 382 area, which is why I was aiming for 9.5. I wasn't aiming for it to be this low. But that shows maybe that the move was a lot weaker than we thought it was. I mean, it was still a very strong move, but not as strong as I thought it was going to be. So yeah, so every bear market to a bull market has shown this break of the 236 to the 382, and it comes back and it retests the 236 almost perfectly every time. I think there was only one market. I think it might have been 2015 where it actually pierced below it. So if you were playing that scenario, you would be having your orders at 7.1k, and that also lines up with the 50 moving average. But as history goes, we haven't respected the 50 moving average too much. We've more respected the 100 moving average. So it's hard for me to put orders there, if I'm honest, because averages aren't on your side. So I wouldn't really be looking at 7.1k if I'm honest. I'm not sure we'll go that low. But but I'm going to leave that red dotted line on there anyway, just for later looking. But if we draw a fib from the top of here, from this whole move up, the 382 sort of lines at 6.8k, and that actually ends up being a really, really nice zone to enter in. So, if I was looking to enter and put some bids in, I'd probably be looking to stretch this zone out. And I understand this is quite a large price range for many of you to look at, but I don't play trying to catch the exact bottom. I like to average in, price cost average, divide it into 3 entries, and that way I can catch the top if it's more bullish than you realize, but I could also catch the bottom if we have a large sell-off, and that averages me in. And usually whenever we see the bottom of the market, we'll wick into it. Like here, look, we've wicked into this, and we've had this massive price move up. Wick into it, massive price move up. Sort of sit here, massive price up, wick here. So it's quite good, especially with Bitcoin, to catch the bottom and by averaging in, and because you just get that wick action. And usually what will happen is it will wick straight into these buy zones and then start to accumulate above it. And by then you've averaged in, and you're in a nice amount of profit on a few of those contracts. So, if looking on the daily, this side of area is looking the best place to buy, and I understand that's quite a big range, but you've got the 0.5 fib protecting your stop. Let me have a look. So you've got the 618. So I'd probably be putting my stop here. That clear in pink. So I'd be having my stop here. You've got the 6k psychological support. You've got technical levels supporting your stop as well. Here, and here, as well as here. You've got some technical support. You've got the 100 moving average protecting that stop. I mean, you've also got the 50 moving average, but I think we'll probably wick through that. And by the time we get there, you've also got the 200 moving average, and I really doubt that we will test the 200 moving average. So this is a really nice place to have your stop. If you're going to averaging on a medium to long term position on Bitcoin. So I'd really be looking to enter in this buy zone. So, but I did want to just go in on a closer time frame and look where if I was trying to pinpoint an entry, this sort of analysis would really help. So I'm just going on a 15-minute. We'll go on a 30-minute, actually, it's probably a bit better. So I also came in before this, and we're not going to be able to see that unless we're on the hourly time frame, sorry about this. Yeah, so I also came in before and drew some trend lines in before this video, and as it looks, this trend line is also going through it perfectly for our buy zone. Perfect for our buy zone. So just another reason why I'd want to be going long in this sort of price range here. And it's something that makes me, want to have price targets above here is because we've actually already tested this buy area. We've already, we've had some big players jump in here. I remember seeing it. It was like 10 mil contract buys have been hit here. So, it makes me less certain that we'll probably hit that. I really think we'll probably hit this first target, possibly wick into my second target, sort of sit on this trend line, and then sort of to move up. We will have to see how that plays out. Anyway, so we're going to go on I just wanted to show you that trend line anyway. So this is a bit more close time frame Fibonacci analysis. So if we get some extensions in here from these lows to the highs, so this is the first lower high confirmed, so we can use this as a good idea of where we might end up. And look, it's as soon as it's hit this sort of 1618 area, it's had this rebound. So this is it's just a great example of why Fibonacci extension is so good to use. It's come down here 382, 618, and you start to see people take profit, and we've wicked into this area. And so it's perfectly reasonable to expect us to wick into this 2.618 or trade near this 2618 area. And look where this lines up again. I'm going to move this over here a bit more so you can see where it might line up a bit better. Look, it's on that trend line. It's on the center of our buy zone. It's even above this last wick, which makes it even nicer of a target to have. So that's just more fib confluence backing up your bias, because this yellow dotted line is the 382 of this whole move up. So it's just a lot of nice fib confluence coming in, and we're just going to do a fib extension from this low to this high as well, because I really think we probably won't break this anymore. And again, that lines up in our buy zone. So this is a really perfect buy zone. So if you wanted to be more vigilant with this entry, you could realistically get rid of this last order here. You could realistically get rid of this last order here. I'm going to leave it on there because I want to keep it on to show the group later. All right, we'll change the color of these stops. So, if you wanted to be more vigilant with your entries, you could divide it into these three zones here: 6.4, 6.6, and 6.8, and use this as your stop. This is below technical levels. It's below the trend line. It gives the market enough room to breathe to wick just below this trend line. So that if I was being more vigilant with my entries, which I'm really not interested in being, I'm interested in getting a nice average fill for a long-term position on margin. Even though the funding rate is killer at the moment, but what are you going to do? I think it's 0.028% interest daily. It was really bad a couple of days ago. Yeah, so I'm sorry that's yellow, but I want to keep it that to show the 382. But I'd be entering here, and here, and the stop here. That would be my vigilant entry. But that's not what I'm going to be going for. I'm going to be going for this average in here. So first buy order here, second buy order here, third here. And that's just some up close time frame analysis. But I might actually show you guys one more thing: volume profile, fixed range. Is it going to load? It's not what I wanted. Why is it not doing it? Okay, so you guys probably aren't familiar with this indicator, but it is called the VPVR, the volume profile visible range. I'm just going to get rid of this red line because you guys don't really know this, but it's called the point of control, the POC. And it basically shows where the most volume has been traded in the market. So the way this indicator works is you look at where the most volumes, it's sort of like a volume breakdown, a volume profile of the market. So you've got the most volume traded here, which is not, look, you've had the most market turning points in this sort of price range as well. We've also got one there, which is where we sold off. And if we look for the next sort of high volume area. It's lining up around here. But you never really want to be targeting dead on where the most volume is, because that's usually when the market doesn't end up. It usually ends up where the last amount of orders end up being. That's hard to explain, but if you imagine if you imagine here, this is where the most orders are going to be, but the market doesn't always turn when the most orders are going to be. It turns when it's got enough orders to overthrow the scales of buying and selling. It's hard to explain. So you would expect the market to make a turning point around sort of where the volume starts to die off of this big range. So if you're going long here, you'd sort of enter in here. Short here. If you're going short here, you'd look to put your orders here, and look, that's where it's wicked into this sort of area. So if we look at the next largest volume and we sort of average where the top is, that would be about here, and we look to enter where the volume starts to die down. Bam! It's in our buy zone again. So it's just, it's another indicator to just align our bias and help us identify where we'd want to be entering. So anyway, that was Bitcoin Watch number 4, and I hope you guys enjoyed the video, and hopefully you guys take this trade and it turns out to be profitable. But if not, then good luck in the markets anyway. This is not financial advice.